Well, welcome to the Naples Money Managers News You Can Use. I'm Dawn Litchfield Brown.
Marcus Bickle, nice to see y'all.
Right, always happy to talk to everyone once a week, whenever possible.
It's true.
And looks like the week's calmed down a little bit from the last couple of times we've been on.
Yeah, absolutely. We'll see come April. We have another tranche of tariffs supposedly hitting in April. So
Right.
We'll see how the market digests that. But for right now, things do seem to have stabilized.
Well, I think what's happening is people are accepting the fact that some things are going to happen.
Yeah.
And I think at first there was so much indecision, which there still is, and that, as we know, market hates that. They hate when there's no real direction. But if there was real good direction, we'd all know what to do. We'd all be gazillionaires, and none of us would be working. So
It's true. It's
that
true.
would be nice. But it's still National Women's Month. Mm-hmm. I think that's pretty cool. So I was looking for this last time and I couldn't find it. But prior to this, and this was after Harris lost the campaign, I wanted to do a piece on women in history, and I went online and I found, all these incredible women in history, and I thought it would be interesting to talk about one or two of them. I mean, here's a Grace Hopper. She was a computer whiz, from Vassar, and it doesn't give me the date. You see, it's a black and white photo. You guys can't see it, but I'm
absolutely.
looking for the date. But anyway, I'll try and pick one each week and maybe talk a little bit about it. There's Ella Fitzgerald, because we all know who that is. Joan Cooney, not Clooney.
Harriet Tubman.
I mean, there's some great.
I'm sure Madame Curie's in there somewhere.
She was
that literally just next?
Yep, Madame Curie was next. But we really want to talk. What I was trying to talk about was how so many women did the really tough things, whether they're the popular things or not, whether today they're even valid or not.
Oh, to Madame Curie, died of radiation, giving us what we have now as X-rays. Her bones are still radioactive to this day.
Whoa.
Yeah, she's sealed inside of a lead sarcophagus.
And our dogs are making noises here, so just know this is a dog-friendly office. And
it is.
so she comes with me every day, and Marcus's dog comes with him every day.
Bring
One
my
day
dog
we'll
Bear.
bring them up here so you can see how adorable they are. But this will be a fairly short video this morning because it's kind of quiet.
Yeah, there's not a lot going on. We're kind of waiting. We're coming up at the end of the first quarter, so everything's kind of, I wouldn't say holding its breath per se, but things are quiet. We're going to wait to see as things get into April where we're headed. We'll be into the second quarter. Portfolio-wise, I think we're really well positioned. We're still sitting on a decent amount of cash.
Yes.
Which we've been talking about this entire time. Additionally, when we had those big dumps a week ago, we were able to buy back a lot of our covered calls at really, really cheap. The time premium had gone out of them. We kept pretty much everything we'd written, about 80 to 90% of the total premium, which is what they give us for those options. And then we sold new ones in December.
Yep.
Getting a lot more premium, a lot more of that money, and a lot more of that protection into the account. And that's going to serve two purposes, folks. If we continue to have a bad year, that money that we got is going to really kind of pad the account, provide a lot of protection against volatility, and kind of coast us into the end of the year. And if the market turns, all of this turns out to be good news, then we will be in a really good position to buy back those calls that we wrote. Net a taxable loss for y'all. Bless you, Don, bless you. And then maybe write something new. So overall, we're very excited about the year ahead, even though things are a little uncertain. That's actually the best time for our portfolios.
That's right. And I always like to describe it as this. When we're talking about calls and getting money from them and all that stuff, if a gambler goes to Vegas and they make a lot of money, they get really excited. They want to make more. So they keep putting more and more and more in. When we sell somebody the right to take our stock away and they give us a lot of money for it, that usually means it's a bullish activity that they think, bullish meaning they think these stocks are going way up.
Yeah.
So it's an indicator as well as a cash generator for us or for your portfolios. Something that most people just don't do in the portfolios because, as we know, it's an amazing amount of work.
It is very time intensive. We've worked out a lot of thought.
And while it's a lot of work, You know, it also gives us strength and gives us peace of mind to know that we are not going to sit across from the table from a client and say, gee, I'm sorry, Mr. and Mrs. Client, you're going to have to downsize, or you can't take that trip, or whatever.
Oh my God, that would be devastating. And folks, what Dawn is saying is very true and can happen. And not even that long ago, everybody thinks 2008 or 2000 or those big dumps, 1987.
Don't talk about that.
But they happen a lot more than you'd think. 2021. The markets were up great 2021, but the following year, 2022, inflation starts to hit. The S&P was down 18%. That is a big loss. Now it's recoverable. It is very much recoverable, especially after a couple of good years. But wouldn't you rather not have to eat the entire loss of the market in a single go? With some kind of hedge, we call it a hedge, in this case it's the options, our worst accounts were down 7.
When you think about a hedge that somebody puts between their homes.
That's a great point, actually.
It's like a protection,
Yeah,
right?
it's a barrier between you and the volatility.
So that's how we look at a hedge.
That's a really good analogy, Dawn.
Yeah.
So I would not want to be in these markets right now unless I had something between me and the volatility. And luckily for all of our clients, you already have that. So I'm pretty excited about the year ahead, regardless of what happens.
Right, and that's, to me, that says a lot. And remember, recovering there's only 2 ways you can recover. One is you need enough time. If you do experience something as dramatic as a 40% drop,
Yeah.
you also need not to be taking money out. Because if you are withdrawing money and you're down 40%, I will tell you, you won't live long enough to recover.
No, there are hard facts there.
So your portfolio needs to be protected, and that's what we're about. We're what we call disaster planners. So we plan for the worst that can possibly happen. So I think what I'm going to do is I'm going to start closing this out with some cute little quotes from some famous people that we have.
Oh, I like that.
Yeah, and this one is from Peter Lynch. It says, everyone has the brain power to make money in stocks. Not everyone has the stomach. If you are susceptible to selling everything in a panic, you ought to avoid stocks and stock mutual funds altogether. Peter Lynch. So with that, I think we can just safely say this is money matters, but most of all and most importantly, you matter, and we are the bees out.
Remember to like and subscribe. Thank you.